car prices have never been higher. You're now paying an average of around $50,000 and coughing up an average of $745 in monthly payments. That's according to a new report by the Consumer Federation of America. Used car prices have soared more than 6% in the past year. Tariffs are expected to drive up prices even more. Americans owe more than $1.6 trillion in auto debt. Repossessions, they're at the highest level since 2009.
Wow.
They've gone up 43% over the past 3 years. Personal financial expert Bobbi Rebell is joining us now.
You know what? I just lost audio, but let me just tell you what's going on in the car market. As you said, there's a lot going on in terms of car prices increasing. You mentioned the average car payment also, so that's in the $700 range. About 1 in 5 people are paying around $1,000 a month. So it is getting to be a very concerning situation, especially with interest rates and tariffs and inflation. So there's a lot going on that has Americans falling short when it comes to their car payments. And then we see delinquencies on the rise.
Bobbi, can you hear us now?
Now I just can hear you. Yes.
Oh, good. We're glad you're connected with us.
Monday morning gremlins.
Exactly. We can deal with that. We hear so much about interest rates. How can a consumer avoid being taken advantage of when it comes to loans?
So this is so important, and I'm so glad that you brought it up. A lot of people think it's better to just pay cash. Dealers don't want to hear that. They want to give you a loan because this is where a lot of dealers make their money. Consumers are really smart these days. They know that they can go online and they can figure out what the dealer paid for the car. So we focus so much on negotiating the price of the car, and we can talk about the out-of-door price, which is something different too. But when it comes to the loan, that's where they're looking to make their money. So it's really important to understand what the cost is for the dealer when they're making that loan, because they're sort of the middleman there. So they get the buy rate. And that's often dependent on, what also your credit rating is and what interest rates are in general. So you want to find out what is their bar rate and then their buy rate, I should say, and then negotiate from there so that, you have to allow them to make some profit, right? We do want businesses to stay in business, but you can negotiate that profit is maybe a little bit smaller and gives you a more favorable rate.
Bobbi, I've always been told that you should not buy a new car because it immediately goes down in its value and that used cars are the way to go, but it looks like they're going up in price as well. Is that a true thought? I've heard it over and over again. What are your thoughts?
So you're right, and you're right. It's one of those both can be true, Hannah. It is better financially to buy a used car in many cases because you do have that steep depreciation. There's all kinds of fancy charts that you can pull up that will show you, if people go online, how much of your car is depreciating in the first, even the first minute you drive it off the lot, but really the first few years. That said, remember when you're buying a used car, it is somewhat of a mystery. You always want to get it checked out by somebody that only works for you, not just rely on what the dealer is telling you. And remember, you're not getting those first few years. A lot of people love to drive new cars, which is why leasing can become so popular, which is usually not the best financial decision. But again, we don't want to live our lives just by the money. We want to be mindful of it. We want to stay within what we can afford, but we also want to give ourselves some grace to kind of have a little fun in life if we can afford it. And so do what's right for you.
Another trend we're seeing is that loans are getting longer. Gone are those 3-year loans we saw back in the 1970s. And the average now is more than 5 years, according to Edmunds. Why do you think this is happening and why does it matter?
Okay, so first of all, and it's getting closer to 7 years for some people. So that's really alarming. Why it matters is because people don't necessarily realize that they're paying so much more for a car, because what they're doing when they sell you a car very often is trying to get you focused on the monthly payment. So when you go to buy a car, they will very often ask you, what is your monthly budget to pay for a car? And then what they'll do is they'll simply take the price that they want you to pay and they will stretch it out longer and give you whatever interest rate they want to give you. Again, they're going to make a margin on the interest rate as well, so that those monthly payments fit your idea of what your budget should be and not necessarily what the car should cost in total. It's a distraction method. It often results in consumers paying a lot more for a car over a lot more time than they should.
Bobbi Rebell, thanks so much for your insights.
Thank you.
We appreciate it.